Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the markets for the week of the 27th of June until the 1st of July. It is officially July now, so I'm wishing you all a good month ahead, and yeah, let's get right into it. Now before we dive into the actual webinar, some of the key highlights of the week was the downgrade of Forex over the course of Thursday and then Friday, and then we also had a sharp rise on the import duties of gold from India. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information related to past performance is not indicative of future results. So, looking at stocks first, as we mentioned during the intro, we had the downgrade of FedEx. Now, the downgrade came from the analysts from Berenberg. They downgraded the stock to hold from a buy rating, and they also lowered the price target to $275 from $330, which is somewhat of a pretty steep drop considering that it's a $55 drop with regards to the revision of the price target. Looking at the price chart itself, you can see prices now are trading around about 223. So 275 is round about at this area here, and the 330s I have to pretty much zoom out even further to find them, that they're more or less sitting right up here. So if I zoom out, again we're on the weekly time frame, so you can see we're pretty much sitting above these highs which were formed pretty much a year ago, more or less. So quite a big difference with regards to the original price target and the revised one as well. Now we can see that prices of FedEx, they also didn't have a pretty good week last week. Now the reason for the downgrade could be, it could have come after this steep drop that we had over the week, since prices were down quite substantially, and at the open of the week, we started at 246 and now we're pretty much trading $23 below that as well. Now 275 is still up here, so you can see there is still some room for uprise with regards to FedEx, but of course, again, comparing it to the original target, which was sitting all the way up here, it's quite a big difference. But nevertheless, obviously, there is still a few weeks until we have the earnings report. So depending on the results that we get from the earnings releases, that could be the catalyst as to why prices could start pushing a little bit higher and up towards the target of 275. Of course, it's not set in stone that because these analysts revise their target to 275, that's the price it's going to reach, but it can give us more or less like an idea of the area that we can work from with regards to setting price targets if we were to trade FedEx. Now, saying all of that, it would be a little bit unfair not mentioning the fact that if we zoom out towards, let's say, from the beginning of the year, it's not faring quite as bad as some other stock, seeing as how price of FedEx are down by almost 14%. Of course, it's still a pretty hefty drop, but comparing to some other stocks which are down more than 20, 30, or even 50%, then obviously, comparing to that one, it's not as bad. But yeah, we're going to see in the next couple of weeks what we're going to be having. And then again, let's not forget we have the earnings releases, which could bring in some added volatility with regards to prices. Next up, moving on to Forex. We had all the major currencies being down against the US dollar, aside from the Canadian dollar, which outweighed the US dollar ever so slightly. So if we just pull up the US dollar, Canadian dollar first, so you're going to see it's not a huge difference, but just comparing it to the other ones, it did outweigh the US dollar, and seeing as how all prices rose over the course of the week, and with the exposure of the Canadian dollar to oil and its correlation to it as well, we can see why it strengthened against the dollar. But saying all of that, one of the biggest losers of the week was the euro. Now the euro fell by 1.2% or 130 pips against the dollar. One of the reasons is that economists fear that a global recession could hit Europe harder, especially with the exposure with the ongoing war going between Russia and Ukraine, and we saw pretty much by how much energy prices were affected. So you can definitely see why economists have that theory. And to add to that, we also had some manufacturing data being released from the Eurozone on Friday. We showed a reading that fell to an almost 2-year low in June. Saying all of that, we also have the ECB's Monetary Policy Committee, which they're going to be meeting up next up in July 21st. And that's when they're expected to begin their tightening cycle and rising interest rates for the first time in a decade. So looking at the chart itself and more like the technical side, I would say we're pretty much trading at these lows right here, which could bring about a bounce back with the coming of next week. This could be the start of a consolidation phase as well. We're going to be trading between this range right here. But again, in my opinion, I would like to see a little bit of a stronger rejection down here. We did get one here, which was like 2 weeks ago. But this one is still trading pretty much towards the lows and at the very middle end of this region right here as well. So yeah, I would have wanted to see more of a stronger rejection if we're planning to start seeing prices rising up back towards these highs right here. But again, we're going to see next week with the open on Monday what sort of sentiment we're having with regards to the euro. And next, looking at the commodities and oil prices, we mentioned earlier that prices rose over the week. They actually rose by 2% as we had news of a supply outage in Libya, and we also had news and reports of a planned strike among Norwegian oil and gas workers, which is planned for next week on July 5th. Now, this could put the country's overall petroleum output by around 8%, or 320,000 barrels of oil per day, which is quite a significant tightening of supplies, if we would say, with regards to oil, and which could have been one of the big factors as to why we had the prices being boosted by 2%. Of course, we're trading a little bit lower off the lows. Throughout the week, we reached a high of around about 113, and now we're trading at 107. So while we're still up on the week, we did have quite a substantial drop from the highs up here, but nevertheless, like we said again, it's still in the green. We're also trading towards the very top of the range, right? I would say middle of the range that started forming back in March 2022. So now we did reject strongly off of it. So the next move could actually be down towards the lower end of the range. But again, it'd be good just give it some time. Let market show you its hand and where it wants to move before jumping the gun a little bit too early. And meanwhile, looking at gold prices, they fell by 0.88% or $16 over the week. We had the headline that we mentioned earlier towards the beginning of the webinar and during the intro that India raised its basic import duty on gold by 5%. So it pretty much rose from 7.5% to 12.5%. And the reason why this is impacting gold prices so strongly is India is obviously the world's second largest gold importer, accounting for 14.1% of total gold imports, and is essentially only behind Switzerland. So we can see the kind of impact that a news release like that can have on gold prices, and we can pretty much clearly see that from the chart as well. Just like oil, we're trading towards the lows of pretty much what could be a range forming in the next couple of days and week. Again, it's not showing any strong rejection, so we could just get a consolidation phase around these lows here before we see a breakout either to the downside or whether we actually want to retest the high of the range, which would be around about here, which is around $1,873. And yeah, there you have it. This as far as the look back and review for this week. Something that we'll be mentioning during the outlook is that obviously we're going to be having the NFP report coming about next week, since that's how it's going to be the beginning of the month. It didn't take place today, which is Friday 1st, so it's going to take place on the second Friday on this occasion of this month. So yeah, definitely stay tuned for the outlook as well, as we're going to be talking a little bit more in detail about that. And yeah, I'll catch you all in the next one. Until then, trade safe.